When we look at what happens next for the Chinese economy, I mean, for years there had been predictions that it would overtake the economy of the U.S. in size. Is that still going to happen?
So, that's that question. I wish I have a crystal ball there, but I'm increasingly suspicious in terms of to what extent China can surpass the U.S. economy. Because if we just look at a per capita number, obviously China has the too many people, anything divided by 1.4 billion is going to be minimum. But I still see China's growth potential in the long run, but what really is constraining the Chinese growth potential comes from both economic fundamentals that is related to the financial repression growth model, and then the other aspect is geopolitics. And a lot of these really create deflationary pressure, both from domestic and from international. And the deflationary pressure right now, we say, probably, there is that argument to be made. The current deflationary pressure could potentially be transitory because, in particular for the consumer price, it was because of a significant drop in pork price. Therefore, price overall at the aggregate level went down. But if you look at if the politics is right, meaning if President Xi Jinping stopped measuring policy swings, if he took the initiative to warm up relationship or ease the relationship with the West, perhaps uncertainties and the risk would de-escalate. Therefore, Chinese household would not be thinking about what if there is a war and my individual economic security is going to be subject to military conflict, whether it is Taiwan or something else. So they might be incentivized to spend, or for that matter, international companies would continue to invest in China. Other than that, I would still think the cloud over the Chinese economy from geopolitics side is still going to be deflationary.
And so what is that? What is the state of international companies investing in China? Because if you listen to earnings calls from companies like Starbucks or like Apple, they'll continue to talk about how core of a region to their growth ambitions that Greater China is. And of course, that kind of looks across, how they break out their regions, but more specifically, they speak about China. And so with that in mind, what is the state of the investment? Because they would say, yeah, this is key to our growth, but at the same time, there's something different at play from what you're spelling out here.
I mean, again, this comes down to the size of the market. Sure. For a long period of time, 1.4 billion is a big market for any consumer-based company, whether it is Estee Lauder or Starbucks, it is a big market. And related to that, the taking a long position on China, there is also the aspect of, there is rising middle class, right? And they are increasingly willing to spend. But the problem right now is the middle income families, they are not necessarily incentivized to spend. And part of the reason is because income growth over the past 10 years have declined, and at household level. And then on top of that, job prospect is also declined, coming from both state employers as well as multinationals. Unemployment number latest is about 21.4%, and now stop updating. If we compare China's youth unemployment number with OECD level, OECD is about 10%, and 21% is only narrowly characterizing urban dwelling youth aged between 16 and 24. Now you realize, at the aggregate level, perhaps youth unemployment is even higher. So from that perspective, I really think China, yes, it is a big market, but perhaps in the midterm, in the short run, at least now, as long as President Xi Jinping's policy does not change, probably the market outlook is not necessarily good. But longer term, probably still positive,